So in today's budget, I am announcing an increase in employers' national insurance contributions.
National insurance has become a major political stooshy, with Labour's increase adding over 700 million to Scotland's public service costs, but reimbursing less than half. Falkirk Council warns the national insurance rise could cost an extra 8 million, and they're not alone. This is happening across Scotland. Labour's national insurance hike will take over 2 billion out of Scotland's economy next year, adding pressure on businesses and raising costs for the public. In practical terms, what does this mean? Listen to this insight from the hair and beauty sector.
Employers NIC affects hairdressing and beauty businesses 5 times more than it affects traditional retail.
Why?
Because we have a 60% wage cost. So if we have 60% wage costs and someone else has 12% wage costs for the same given turnover, that's 5 times as much.
Richard Hughes from the Office of Budget Responsibility explains the economic ripple effect.
Much of the slowdown in real earnings growth and in household disposable income over the next 2 years is driven by the fact that we think that the bulk of the incidence of the employer national insurance rises will ultimately fall on the real wages of employees. And so a big part of what is weighing on real earnings growth in 2025 and 2026 is passing on that increase in payroll costs.
Starmer's Labour is ignoring the realities raised in Holyrood and Westminster.
The impact of employers' national insurance contributions are not going to improve the standard of living in people in the United Kingdom over a 5-year period.
76% of the total cost of the increase in employers' national insurance will be passed through lower real wages. That not only tells you that there will be an impact on businesses, but also, contrary to what has been suggested by some in this chamber today, there will also be an impact on working people.
The pressure is real. GPs operating on fixed funding can't simply absorb these costs, potentially leading to fewer staff and fewer appointments. While delivering Scotland's budget, Shona Robison highlights the wider economic impact.
The UK Government has actually added to the pressures that Scotland faces with the increase in employers' national insurance contributions. This hike will add well over £700 million to the cost of delivering public services.
Thousands of charities, including Marie Curie, the Scottish SPCA and Scottish universities, face severe financial strain due to these increases. This highlights why independence matters. Without full fiscal control, Westminster's decisions will keep straining our communities and businesses. Some might point to the Barnett formula increase as a solution, but in reality it's not. Listen to Ben Lake's stark assessment.
With the Barnett formula, I'm not going to thank for the larger settlement because that is only a function of the fact of spending decisions made for the purposes and to address the needs of public services in England.
Even with these adjustments, Scotland gets less funding than in 2020, a sticking plaster on a systematic issue. Decisions made in Scotland can build a fair and prosperous nation. Only independence ensures the policies and society we choose. Until next time, stay safe, stay focused, and keep working together for independence.